Ladies and gentlemen, good day and welcome to the Bikaji Foods International Limited Q4 FY23 earnings conference call, hosted by Essential Technologies Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Vijay Kanchandani from Essential Technologies Private Limited. Thank you, and over to you, sir.
Thank you. Welcome to Bikaji Foods International Q4 FY23 earnings conference call. From the management, we have today Mr. Deepak Agarwal, Managing Director, Mr. Vishnu, CFO, and Mr. Manoj Verma, CEO. Now I request the management to take us through the key opening remarks and so that we can open the floor for the Q&A session. Now I hand over the call to Mr. Deepak Agarwal for his opening remarks. Thank you, and over to you, sir.
Thank you, Vijay. So, Mr. Deepak is not there, so I am Deepak. And thank you to all the analysts and all the share investors who joined the call. So we are presenting Q4 and full year review of Bikaji Foods International Limited. I have with me Mr. Manoj Verma, who is the Chief Operating Officer, and along with Jitendra Singh Sohal, who is the Sales Head, VP Sales. Last FY23 has been historical year for Bikaji Foods. We have done a multiple thing at input metrics, be it right procurement, be it right quality, multiple plant at different location, investment in people, and output has been very satisfactory to us. So last year, if you see full year, we've grown at close to 22% over FY22. Our revenue from operations is close to 1,966 crore rupees. Our EBITDA is close to 214 crore rupees. That is 53% growth over last year. Our PAT is close to 66.5% growth over last year. We closed at 126 crore rupees PAT over last year. Our gross margin, so when we started the year FY23, in first quarter, we have seen a huge inflationary pressure across all key raw materials, be it edible oil or multiple pulses, crude, diesel, all the including inward factors. But first quarter was tough for us. In first quarter, we done a bit of close to 7.3%, the gross margin was close to 24%. However, when we completed the year, our full year gross margin is at 29% plus. So we done a multiple thing at gross margin level, and we'll explain in detail what we have done. Our EBITDA margin is around 11%, close to 11%, 10.86%, which is close to 220 basis points higher than last year. So, and then when you Q4, our revenue from operation has grown by 15% plus, around 16%. Our EBITDA is close to 62 crore rupees and has grown by 52%. Our gross margin is at its highest, it's around 34%, and our EBITDA is around 13.4%. FY23 has been a milestone year for us. There are multiple events which have happened in last year. We got listed in BSE and NSE in November 2022. We added 3 plants, one in Kanpur, one in Muzaffarpur, and one in Bikaner, in the name of Hanuman. We also got PLI subsidy scheme of 261 crore rupees, which we will get over the next 6 years. And we got the first tranche of close to 20 crore rupees in March 2023. We expanded our visa sales office in South India. That's the first time so we've taken our offices outside Bikaner. We also strengthened the management across all key functions, be it supply chain, be it quality, production. Across key position, we have filled the position to strengthen our bench. Shrivatsan Agarwal, who is the founder of the company. So he started the brand Bikaji in 1993, and he's the pioneer. He has experience of more than 3 decades working in the snacks industry. He is the chairman of the company. We have a very strong board with Shrivatsan Agarwal ji, Deepak Agarwal, and Shweta Agarwal. All 3 are the promoter and founder of the company. We are inputting a lot of experience in the company in strengthening the quality, procurement, product quality across every period. Sachin Kumar Bhartiya, who is a non-executive director and nominee director, and he is a partner in Lighthouse Fund. Mr. Siraj Chaudhary, He is an independent director and he's having great experience in FMCG industry, agri industry. Earlier he was a chairman in Cargill India. Mr. Kuldeep Bachawat, he is an independent director in CAPFA and he is having great experience in finance background. Mr. Vipul Prakash is currently a CEO of Make My Trip India and he's having plus 20 years experience in PepsiCo India. Mr. Nikhil Vora, he is running Sixth Sense Fund. We are supported by very strong professional management, starting with Mr. Manoj Verma, who is the CEO of the company. Recently, Mr. Mahavik Jain has joined the company, who is the CBO of the company. Mr. Mukesh Sharma, he is the head supply chain, having great experience in Britannia, Tata. Mr. Ram Sinha, he is the president, sales, looking after modern trade and OGP for South business. He is having great experience in Reliance Retail of more than 16 years. Ms. Neha Rao, she joined us as VP Marketing last year. Mr. Bhupender Singh Sohal, he is with us for more than 9 years, heading our sales. Mr. Rahul Joshi, he is the company secretary and compliance officer. Mr. Shambhu Dayal Gupta, he is the president finance and corporate affairs. He has joined the company more than 30 years. Now I'll hand over to Mr. Manoj Verma, who will take you through the presentation.
Thanks, Bishop. So, gentlemen, just taking you through a few snapshots now, the highlights of the company I was to speak about. So, Bikaji, in terms of market leadership, we enjoy third largest position in ethnic snacks space in the country. We are the largest manufacturer of Bikaneri Bhujia, producing about 36,000 tons annually. We are the second largest manufacturer of handmade papad in the country. In terms of our distribution and capacity, we as a company, we have a reach of 9.5 lakh outlets across the country. We have exports covering around 25 countries around the globe. We have now the manufacturing capacity, installed capacity of almost 270,000 metric tons, and this is across country various locations. In terms of our organization and its performance, so our 5-year revenue CAGR, value CAGR is 21.6% and volume is 13%. Talking about company strength, we have a diversified product portfolio of over 300 products. We enjoy market leadership position in the family pack. So our 59% of our business comes from a family pack, which speaks about the strength of the brand. Talking about product categories, so we are into broadly 6 categories. First and foremost is about Bhujia. So that's one, followed by Namkeen. Third is packaged sweets. Fourth is Papad. Fifth is western snacks. And the 6th is others, wherein it is about frozen, it's about mad items, and the gift products and all. So these are the key. And we have launched few products very recently, to cater or to address the need and opportunity in the premium category and also the health space. So this is about multigrain Bhujia, this is about jowar mix, so the roasted products. We also launched few products in mass category, which is like churmur, save murmura, cattle chips, so on and so forth. Also to cater the international opportunities for our export, we have very recently launched packed thali, frozen thali. There are certain products and packs which we have launched and relaunched. So the one I'm talking about is in the can kind of a stuff. So this is about premiumization and increasing the gross margin on certain products which already exist, but this is about some change in packaging as well, besides new product launch. Talking about product categories that we look at, So revenue sales CAGR for last 5 years is 22%. If I talk about ethnic snacks, 5 years CAGR growth is 21%. Packaged sweets has grown at 21% for last 5 years CAGR. Papad has grown at 15%. Western snacks delivered a growth of 42%, and the other category has delivered 14% growth over last 5 years. Product mix, we were to look at, so 35 as of 22, 35% of our business used to come from bhujia, and 35.6% was from namkeen. Packaged sweet was 12.7, papad was 6.7, Western snacks was 5.7, and all others was 4.3. Whereas if we look at in year 23, there is a shift, and what has happened is that namkeen has gained share of business by virtue of its high growth what it has delivered. So last year's share of business is namkeen contributes to 36.1, which is the highest, followed by bhujia, which is 33.4, then is sweet 12.1, then is papad, which is at 6.2. Western snacks has gained substantial with a share of business of 8.2%, and the others is 3.9% share of business. As we have been talking, in the past about that we look at business into 3 parts, which is core, focus, and others. So if I was to talk on the growth, so core states over the last 5 years has delivered a CAGR growth of 21%. Focus states has delivered CAGR growth of 22%. Other states at 33%, and export CAGR growth of 15%. If we look Bikaji business by zone, so each zone has grown at 24% over last 5 years. North has delivered a CAGR growth of 20% over last 5 years. South, that's where is a very recent entry, has delivered a growth of 68%, and West has delivered a CAGR growth of 16%. Talking about our SKU mix, if we look at, so as of 22, our family packs were contributing to 3.6%, whereas as of last year, so FY23, the contribution of family pack has come down to 58.9, and in fact this is what we had projected, and this is by virtue of gaining high share of business in the Western snacks, which is primarily about 5 and 10 rupee pack. Talking about our manufacturing facilities and capacity, I would request Rishabh to please.
So in current fiscal in 23, we have added 3 new plants in Kanpur, Muzaffarpur, and Bikaji. That's the name of Hanuman. All the 3 plants have a capacity of Western snacks and namkeen. So we have total capacity of close to 2.7 lakh metric tons. In FY24, we'll also add 3 more capacity. One in Bikaji, that's in a category of frozen, that will start in next 3 to 4 months. Another one is our Patna CMU, that will start by the end of this month, maybe June 1st, June 2nd week. And last one is Raipur. So Raipur will start as a CMU, and we tie up with CMU contractor, and that will start by end of this financial year. So the 3 will further add to the capacity of our unit, of total capacity. We also got PLI, and we committed close to 440 crore rupees, and we'll complete all the capex by end of this financial year to complete all the obligations.
Yeah. So talking on our pan-India distribution, so if we look at, the point to note here is that in last 1 year, Bikaji has gained increased the reach by 100,000 outlets. So as of end 21, our reach was 8.53 lakh outlets, which has now come to 9.52 lakh outlets. So that's the major leap which we as a company has taken. We've also expanded our distributor or channel partner base over the years. Talking about marketing initiatives, so we spent close to 2% last year, which is what was committed. Our presence across communication vehicles for ATL, be it television, be it radio, be it other TV channels, social media. So few of the brand collaborations, what we did was tie-ups with PVR, certain campaigns. We tied up with ATM. For international spend, international marketing, we were present on television across US, Canada, UK, other European countries, Australia, New Zealand. So that's what has been our presence. We actively participated in international exhibitions to support our export, such as SAIL in Paris, which happened very recently. Then is, let's say, for example, very recently there was a Swimming night which happened in UK that was sponsored by Bikaji, and a lot of sampling activity which was done. Then some certain ground activations at Sharjah, this is to support Middle East sales. Coming on to a new brand campaign, so Amitabh Bachchan continues to be our brand ambassador, who's there to Diwali this year. By end of this quarter, we would be closing down the extension of it or whatever next is to be done. We also plan to shoot few new brand campaigns this year. That's what we will do. And what we have on cards is the festival campaign, because the next 2 quarters for us as an organization and opportunity both are very large. So that's what the marketing team is working on. Coming on to the strategic initiatives to further consolidate our leadership position in our core states. What we have done is that new manufacturing facilities, which now have all been commissioned, firing well, and has been immense support last year to deliver the numbers, and in fact over-delivers our budget numbers for all 3 states. Then was about premiumization and upgrading. What we identified for ourselves was that the set of SKUs which were higher on gross margin. So our sales team is continuously and consciously working to improve the mix so as to help increase the bottom line as well. There's been certain rollout of special programs which our sales team has done. So this is about top-end stores engagement program, certain wholesale and distributor channel partner program. That's what they rolled out in these core states. Specific shopper marketing activities so as to increase offtake and drive SKU range and portfolio in the store. And last but not the least is about sales automation tools, which is what is being leveraged in these core states. Now talking about our to address focus states and other markets. So what we are doing in focus states is expanding our distributor base, distribution. Second is about focusing on categories beyond top-selling products. So earlier it used to be a couple of categories where the focus used to be and Bikaji was known for. Now we are trying to make this, and that's been our effort for all this time to increase that stuff. Develop products to cater local taste. So this is these certain products which are more specific to this market. Similarly for southern markets, the South Indian products, that's what we've done. We continue to leverage modern trade channels by virtue of our strong relations with all national chains. So in all these focus states, we enjoy disproportionate market share in the modern trade channel by the virtue of the JVPs what we have with these accounts for Pan India. Last is about the sales team or the feet on the ground, so we strengthen our teams there. Talking about other markets, what we're doing is that one, we are expanding our super stockist network there. That's what helps us increase reach and coverage to down top strata. We continue to spend behind ATL activities, so that's what generates brand awareness and therefore, entry to the...
So the audio is getting slightly muffled. Request if it can be close to...
Hello? Is it better now?
Yes, sir. Thank
you. Yeah. So, continued investment behind ATL activation, so that's what helps generate brand awareness. Leveraging e-com B2B channels, so these channels helps us and the cost to serve model becomes much more economical. Then it's talking about, our leveraging technology. So technology is there across platform, starting from our depots, which is ASRS, then is, we talk about DMS, then is SFA, and, at our production on the factory as well. Now coming on to our financials, Rishabh.
Yeah. Thank you. So our revenue from operation has grown by 22% over last 4-5 years. Across all the states, be it core or focus, all have grown at plus 20%. Our gross margin is around 29% in FY23, which was close to 27.4% in FY22. So we have done multiple things in keeping a gross margin to a higher level. Be it right sourcing, be it premiumization of few products, like I'll give you an example. So our focus product, which are high on gross margin. So last year it was close to 11%, 11.2%, we have taken this to 12%. So that helped us increase gross margin by around 0.5%. We also improve our purchase, be it long-term contract or be it right sourcing from right partners, and that has helped us in improving the gross margin. Our EBITDA has grown to close to 11%. From ROE, ROC perspective, so our ROC is around 15%, which was close to 13.9% last year, and our ROE has improved to 10.5%. Our working capital, which includes debtors, creditor, and inventory, is close to 19 days. Our asset turnover ratio is close to 3.3. So we completed our capex cycle. So how will we improve our ROE and ROC and ultimately net asset turnover ratio? So by FY24, we completed our capex cycle that will give a capacity of close to 4,500 crore plus. Post FY24, we will not have to do a major capex, and the further FY24 capex will be sufficient to fund the next 2-3 years growth. So that's how we'll try to improve our asset turnover ratio to 3.3 to plus 4, and that will also improve our ROE and ROC in coming years. In FY23, if you look at FY23, so our revenue from operation has grown by 22%. We have closed our turnover of around 1966 crore rupees. Our ethnic snacks business has grown plus 20%. Our packaged food business has grown at plus 17%. And our western snacks, where we have set up most of the capacity across many states, has grown at plus around 80%. Papad category, which is highly unorganized, we've grown at close to 16%. So in FY23, our value growth is close to 22%, whereas our volume growth is plus 15%. When we look at Q4 FY23, our revenue from operation has grown at close to 15.5%. Our ethnic snacks business has grown at close to 15%. So in Q4, we started with January, which was a very dull month for, I think, across all the food brands, where you said Jan and Feb was little dull for us, but from March we are seeing good uptake in demand at a rural and urban stage. So ethnic snacks business has grown 18%, packaged sweets close to 14%, western snacks is in good demand of close to 41%. Papad has grown close to 8.3%. So that's the overall category-wise growth we done in last quarter. In revenue from operations perspective, we've grown at close to 462 crore rupees of turnover versus 400 in FY22 last quarter. Our gross margin has improved substantially, whereas last quarter we done close to 29% gross margin versus this year. There is 5% margin improvement, and we closed to 34%. And from compared to December quarter, third quarter, our gross margins improved by close to 4%. That has resulted in our PAT margin of close to 8.28% in last quarter versus 6% in corresponding last quarter. Over the year, we closed at close to 6.5% PAT margin, and we closed at 127 crore rupees of PAT. Our revenue from operation has grown at close to 16% over last quarter and 22% year on year. EBITDA has grown at close to 52% over last quarter and year also. And our PAT margin has grown 57% over last quarter. And we closed 30 crore rupees in FY23 last quarter. We've been witnessing softening of raw material prices and packing material prices in FY23, resulting in improvement of gross margin by 168 basis points when we see a full year basis. EBITDA margin is also supported by many efficiency and many measures has been taken at all the cost heads, including purchase, including efficiency, including focus on few high EBITDA items, and we have tried to improve it all levels, all cost heads basically. Our edible oil, when we started FY20 in quarter 1 FY2021, when we see our key raw material price like edible oil, which was around 1. So currently also it's up, it's close to 1.4 compared to last 3 years. But yeah, when we see we've seen very upstick in the first quarter of this year. But yeah, currently it's reduced to close to 30% from its peak. Also processing flows, the laminates, the corrugated box, all is supported in last quarter. We got a PLI scheme from government where we committed close to 400 crore rupees of investment. We got the time till FY24 to complete all the capex and investment plan. We got close to 57 crore rupees in category 1 and close to 23 crore rupees in category 2. Category 3, which is mainly any ad spend which will be outside India and international market. We will get reimbursement of the same. So we realized close to 19.84 crore, which is the first tranche of 21-22 in March 2023. We are not recognized yet in our books of accounts in our P&L. There is one capex condition which is yet to fulfill, and we will complete the capex condition by end of this calendar year mostly. And in FY24 we will most probably take our PLI benefit in our books of accounts in other operating income. From outlook perspective in FY24, we are targeted to improve gross margin of 0.5% on account of improved purchase planning. We are also setting a plant in Bihar. So the plant in Bihar will start next month, and that will shift some namkeen category to that plant, namkeen chips category. That will also improve logistic cost, because currently we are sending goods from Bikaner to Bihar, which is close to 600 kilometers far. So that will help in improving logistic costs. We are also planning to transform our power consumption to green and sustainable energy, and we are targeting 30% of our total power consumption to shift to green and sustainable energy. We are also focusing on improving the high gross margin products. Currently close to 13%. We are targeting to take this to 18% in next 3 years. From future readiness perspective, we are targeting to increase reach to another 1.5 lakh outlets at the end of this financial year. Last year we added close to 1 lakh outlets. This year we also targeted to add feet on ground, so who are our eyes and ears who directly touch with all the retailers of Bikaji Foods. So we are also adding 500 feet on ground. Amitabh Bachchan being our brand ambassador, so we are investing heavily in this campaign, and we also gained share in last 4 years. We got a good experience with having collaboration with him, and we are planning to further taking this contract to the next 2 years. We are continuously investing in leadership and functional team, including all the senior management, and this year also we are targeting the same. Data science is very important for us. We are working on data, and all the decisions should be backed by data. That's what our approach is. So that's the part from presentation. We are open to any question if you have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants.
Yeah. Gentlemen, this presentation is uploaded, so what we spoke about is all now up on the site.
Thank you very much. First question from the line of Harsha from InCred Capital Financial Services. Please go ahead.
Yeah, hi sir. Thanks for taking my question. Sir, when you spoke about improvement of gross margins of 0.5 percentage, is that on the base of FY23 or on the base of fourth quarter FY23?
FY23.
But sir, why are we so conservative in that outlook? Because we are planning to increase our share of high gross margin SKUs, plus we'll also have other benefits coming in. Plus, if we also assume that the edible oil environment remains stable, then why not plan? The kind of margins which we have achieved in fourth quarter.
Right. So basically, 0.5% what we are told is basic improved purchase planning. Other than this, of course, we have planned to increase the gross margin from above 5.5, but I am speaking only about proper purchase planning and improving on high beta item, high beta product. That's for 0.5. But our target, like last year, we have close to 29% gross margin, and we always took it over the year, not last quarter, because last quarter being it's a fresh crop. The potato price was very low because December to March is a fresh crop. So we always see last 12 months overall average gross margin. So last year gross margin is close to 9%. We want to take this to around close to 150 basis points higher than last year. That's our target. And when we look at over the years.
Okay, correct. Thanks for that. And then how should we look at the basically costs below gross level? Let's see the other expenses part. You talked about benefits there also as well from logistics as well. So let's say if we are targeting at 150 basis points improvement in gross margin, should we target let's say a higher improvement at EBITDA level?
See, basically we are working on all the costs, be it manufacturing costs, like we are going at solar, be it logistic costs when we shift a plant, we are building a plant across all key locations. Suppose we are working at all fronts, and we want to improve gross our EBITDA, and from each front basically, be it logistic costs, so we want to improve 0.2, 0.3 basis point compared to last year. Be it manufacturing costs where we want to improve to around 0.3 basis points. So of course we want to have another 0.5, half a percent basis point improvement in our EBITDA from other costs. Of course, but yeah, what's happening? So we have opened a plant in last 1 year, and this year we'll open a plant. So initially the cost of opening a plant and cost of running is very high because we will not be running at full capacity. We will be running this is a starting period. So any plant, so if it not at for 35-40% realization, we will be break even or we'll start giving margin. So new plant will start giving benefit in next 2-3 years.
Okay, so those benefits will come from FY25 onwards.
FY25, yes.
Okay. And sir, on this PLI front, let's say this 260 crores, which is the benefit which we'll be getting. How will it be equally dispersed over the 6 years, or how will the dispersion be?
So basically, it's a ballooning payment. So normal government has taken 1920 as a base year, and so this is and they have taken us close to 7.5. There will be close to 7.5% subsidy percentage on incremental sales which we do every year. So basically, in 2022 we done sales of close to 1,300 crore rupees, and the base was 1,100. So they've given in 20 crore rupees. So next year, so for the 2023, we'll get close to 32 crore rupees. So it's a ballooning. So this year we'll get 31, then 45, then 60. So that's the way the ballooning payment is there. So we'll get in next 6 years, we'll get 261 crore rupees.
Okay. Okay, got it. And sir, just one thing, for FY23, what would be our split, basically a salience of sales coming from core states? It used to be in the range of 72%, right, in FY22. So what is that?
Yeah.
What is that percentage now in FY23?
So FY23, the core state is around 73%.
So it's similar as last year. So basically, the core states and focus states have grown at the same pace in FY23. Is that right, sir?
Right.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Ravi Srivastava from Bay Capital India Fund. Please go ahead.
Hi, Manoj. Hi, Rishabh. First of all, congratulations.
Hi.
Hi, Ravi. Hope you guys are doing well. Couple of questions from my side. One is on the revenue, right? So you guys grew at 22% for the full year. And as I understand, I think 15% volume growth. So just the remaining, if you can talk to us about how much was price increase and how much was mix change that drove the additional over and above volume growth. That will be the first question. And second question is then, I think Manoj ji spoke about 11% was, high margin products, and that has increased to 13% for this year. And you're planning to take that up to 18%. How does that impact overall margins if you have done some analysis on that?
Yeah. Thank you, Ravi. So basically, we're grown at close to 22% overall revenue. But ethnic snacks is grown at 21%, same with packaged sweets, Papad at 15%, Western snacks is 42%. So this is a value growth. So volume growth, volume growth was close to 15.3% compared to last year. But when you see last quarter, so we're grown at close to 16%, but our volume growth is up for 13%. That's the volume growth we've seen in last quarter. Going forward next financial year, so we are looking at more volume-driven growth rather than value-driven growth, because in last quarter we have taken MRP cut, where we also increased the grammage to by looking at consumer like in 5 rupee MRP. Previously we were giving 16 gram in a few items. We have taken this to 20 gram and 25 gram also. So that's a call we have taken. Also, we need to look at competitor at a very tight level. So that's the way volume growth we have done, and we've taken price growth of close to 5.5-6% in FY23 compared to last year. But this year we are looking at more volume-driven growth. That's the point number one. And what was the other question?
Yeah, so the other question was about the product mix. So Ravi, I think we spoke in the earlier calls as well. So we've identified set of brands which are high on gross margin. And what we are doing is that there's a conscious effort to drive their contribution, drive these categories. And this, it's not just a sales effort. It is, our marketing campaigns, our shopper marketing staff, the tracking of the fill rate of these SKUs. So everyone end to end, our, team is aligned on that stuff. And that's what we are working on. Currently, we've moved this middle to about 12% is the contribution, 13% it has come to. We intend to take it to 18% over the next 2-3 years, 3 years from now.
Understood. So just Manoj on that, if it moves to 18%, what is the delta on the gross margins? So for example, it is 13% today.
Sure. Yeah.
So basically, we'll get our gross margin will improve close to 1.2% if we take this to next level.
Okay, so if it goes to 18, then it has 1.2% expansion in gross margin. Is that the?
Because we'll invest also, we'll do some pricing correction and all things, because we'll push that product. So on net we'll do close to 1.2 to 1.3% gross margin expansion from that product.
Got it. Just one more thing. Just that, for the full year, I think the EBITDA margins are close to 10.9, 11%, while for the last quarter it was 13% plus. How should we think about operating margins or EBITDA margins, 2 to 3 years down the line? Is 13% a good indication of where you want to do as you are trying to expand, overall margin? Is 13%, 14% a good number to track, or how would you sort of think about it?
So if you look at next 2-3 years agenda, Of course, that's our target because we need to move 114% type of EBITDA. That's the target we are taking. But yeah, you see FY24, so last year EBITDA was close to 11%. So we want to do this to at least 100 basis points. That's the target we are taking across all functions, all key levels. So that's the target we are taking. That's the brand we want to grow. Because we see, we are also growing it. We also, last 5-6 years, growing 20% plus CAGR. When volume increase, there are multiple costs which become more efficient and cost doesn't increase from as sales increase. So that's what we want to improve.
Understood. But the focus will be largely on volume growth, right? That is the take.
Yeah. Yes.
Understood. Got it. That's it from my side. Thank you, guys. Thank you.
Thanks, Ravi.
Thank you.
Thank you. The next question is from the line of Binoy from Sunidhi Securities and Finance. Please go ahead.
Hi, thank you for the opportunity. Just want to understand your the raw material basket. How much of it would be edible oils? How much packaging material, potatoes, and likewise the other raw materials?
Yeah. So basically, edible oil, if you take it compared to sales, then edible oil is close to 23%. Pulses, including pulses and flour, so it's around 20-29%. And packaging material is around 9.5%. That's overall. Then there are dry fruit, there are milk, so there are multiple. We are not dependent on any single raw material. That's the beauty of. So we can improve gross. Any significant increase in single raw material doesn't depend much on our gross margin. So in pulses also we are using more than 5-6 type of dal, 2-3 types of other. So overall, yeah. So dry fruit we are using close to 5.5-6%. Sugar is close to 3%. Milk close to 3.5%. So that's overall take us to 70%.
And all these percentages that you mentioned are as a percent of sales, right?
Yeah.
Okay. Just a clarification, small one. You said pulses is how much?
So I'll come back to the exact number, but it's around 27-28%. It's around. Yeah.
Okay. Yeah. And how about potato? You said.
Potato is close to 3.5%. Close to 3.5%. Yes.
Understood. That's all from my side. Thanks.
Thank you. Participants, to ask a question, you may press star and 1. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Hi, Manoj, Rishabh, good evening. Thanks for the opportunity.
Hi, Shirish.
How are you?
Good, Shirish.
Yeah. Just a couple of questions. On slide 19, where you have given the regional mix, and I did a quick calculation where we have seen our strongest growth of 75% in South. I'm doing the YOY comparison for full year. Now, obviously, your distribution expansion is helping you to grow the market. But I was amazed to see the North and East, which is again a strong snacking market. So you have reported a growth of 20% and 31% in Eastern region. I fail to understand, and maybe you can give some qualitative comments, that in the Western part, our revenue has moved to 123 crores against the 115 which you reported in FY22, which is about 6.7% growth. So is there any competition angle, or is there anything snacking per se activities or something like? So I was looking for some qualitative answer from you.
Sure, Shirish. I think that's a very valid observation, and thanks for bringing it up. So let me tell you, when we speak about our core and focus states, so unfortunately, none of these states from the West fall into any of these brackets. So when we say core, and that's where we invest and to hold our guns. So East, if you look at both Assam and Bihar section, the East geography doing well for us. North, when we speak, primarily, Rajasthan, which is the largest state, and if Rajasthan does well, entire North metrics would do well. South, we have already, what we've called out 2 states, which is Karnataka and Telangana, are part of our focus state, and hence, so the focus on South, and therefore, and also the number looks substantially high because of low base. Western states, to talk about, not that, we choose to ignore, but honestly speaking, we do not have as much focus. I think, you will have to hold for couple of years more. We are all set to come up with a plant in Chhattisgarh by end of this financial year. And maybe next year you will see that the Western markets will start witnessing the higher growth, and in line with the investment what we intend to make in later this year.
Thank you. The current participant has left the question queue. Mr. Pardeshi, are you there?
Yes, I'm back. Sorry.
Okay. Please go ahead, sir.
Yeah. So, sorry, Manoj, I lost. I was cut some in between. So, I could not hear what you said, but maybe I'll take it.
You want me to repeat, Shirish? I'll quickly, give you,
No, I'll take it offline. No issues. I have a second question on the gross margin front. The observation here is that we have started gaining some benefit here, and Rishabh did say that we are targeting at least 100 basis point improvement in the margin. But just one historical data point, if you can share. When the input raw material prices correct, does that mean that the local competition is already started hitting us? Or maybe if you can give some color more on the local competition, especially in the high consumption states.
So, Shirish, I'll take this question. So one is that if we look at last year, so as we got into this year, so quarter one was the period wherein, there were headwinds and, in terms of the pricing of the commodities, and, which really, that gave a big hit to our bottom line numbers. Over the quarters, what we did was that, we went back, we tried to improve our efficiencies, productivity, some grammage reduction, price increase, whatever. And what happened was that by quarter four, the commodity prices also started softening. So that's what we were benefited in the double sense. One was that we improved our efficiencies and things, corrected things, and second is that the softening of prices. And numbers speak louder than for what I say. That if you compare, the EBITDA margin of quarter four versus quarter one, that's the differential, what was there. Now to your question, with the softening of prices here, not only the regional players, even the national players or the large players have started passing, the pricing benefit to the consumers, and so have we done. Another data point to validate for what I'm saying is that if you look at our quarter four numbers, so our volume increase is 13%, volume growth is 13%, and value growth is about 16%. Whereas if you look at our annual number, it is 15 and 22. So this speaks about the question what you have asked.
Understood, Manoj, that's helpful. Just one follow-up here. You mentioned that you have started giving back the benefit. Could you quantify, is that the practice which you are going to follow for next 4 quarters, or you're still not completely passed on and you're trying to gauge the competition and the market, how consumer behave?
So it's both. I think it is, Shirish, it is tactical and strategic, both. That's what we look at it. And also, we very closely watch what competition is, doing in the marketplace. And what would help us, take this decision is also the commodity pricing. So today, prices are such that which can help us or which allows us to do this. Therefore, we are doing it. Tomorrow, let's say if there's something or some catastrophe or some stuff happens that wherein prices go beyond our expectation, maybe we'll have to stop or cut the spends what we are doing.
Okay. My last question, Manoj, that's helpful. In terms of competition, do you see the heightened competition or more regional competition in the Western or in the ethnic? Because I see that most of the MNCs are also now trying to get aggressive into the ethnic.
So I think, perhaps what you're talking is right, more in the sense that, ethnic, there were very few players earlier. and Western had many, so that this was a cluttered market. Today, we also see that now a lot of companies have started trying to get into the ethnic space, which is true. But I think there's no less competition on the Western snacks as well. I mean, we see enough and more, new variants coming in. The companies who are well established are trying to, to do the brand extension and all that stuff. So competition is on the both ends, Siri, not just one.
Thank you, Manoj. Thank you, Deepak, and Rishabh. Thanks for the opportunity and all the best.
Thank you. The next question is from the line of Saurabh Jain from HDFC Life Insurance. Please go ahead.
Yes, sir. Thanks for the opportunity. So, sir, two questions from my side. Firstly, I'm referring to slide 21, where you have mentioned the installed capacity of about 270,000 metric tons. Can you comment that what is the volume that you have produced in FY23?
So FY23, if you look at overall average, so we have been close to 40-43%, near around 40-43%. But you see, it depends on category. Like sweets is largely factual driven. So that's the peak capacity we use normally from Rakhi Bikaji. But yeah, Bhujia Namkeen we had done reasonably good capacity. But yeah, last year FY22 we started building capacity. So yeah, our current usage capacity is close to between around 40-43%. But yeah, our target is to take these to 65-70% in next 3 years.
Okay, so you're saying that the optimum capacity utilization is about 65-70%.
Optimum means in salty snacks is close to 85%. Optimum. We can take this to 85%. Comfortable.
Okay, sir. And my next.
But in sweets, we see the yearly average level. It must.
Sorry to interrupt you, sir. This is the operator. Sir, your audio is now getting muffled. Request if you can be closer to the.
Yeah.
Thank you.
Yeah, but in sweets, it's largely seasonal driven. So in sweets, taking this to 85% is actually tough. So in sweets, we can take this to 45-50% if we see a blended average over the years, 45%. But in salty snacks, we can constantly take this to 85%.
Got it. And what is the capacity that will come under operation in the year FY24? That is CWIP.
So we have 3 plants coming up. One is frozen, another one is Patna, which is CMU basically, and the other one is in Raipur. That's also CMU. So basically, the 2 are CMU and one is frozen plant, which will come in next 3-4 months. So the overall capacity in Patna will be close to around 10,000 tons. 10,000 tons. But like overall, if you merge all, so capacity will be close to between 25,000 tons addition.
Okay. Sir, my next question is on the other expenses. So that if we see for Q4, they have gone up by about 34%. And if we look at the percentage of sales also, they have gone up both on YOY basis and the QOQ basis. So what is the reason for this?
So basically, there are two, three things basically. One is basically there are like fuel costs and people costs increased last year, and the logistic costs increased to around 0.3-0.4%. And also there was fair value adjustment in investment that's close to 0.6-0.7%. So that's the cost which we have overall close to 2.5% increase in other expenses compared to last year.
So attributing this to first, you're saying manpower cost. Is that right?
There was ad spend which has increased.
Okay.
Last quarter, so ad spend was increased. There was trade forward charge which has been increased. So there are multiple costs which we invested largely. We invested in ad basically to build a market, to build a more to build a campaign. We also logistic costs which has been increased because we are building snacks market. So there were chips, Western snacks. So Western snacks involve reasonably good logistic costs. That's why we are building plant across all 3 states, nearby states. So logistic cost has increased little bit, and then there was fair value adjustment on investments.
Okay. So these three items. Got it. And in terms of the overall, in terms of quantum, what is the ad spend for Q4 and for entire FY23?
So ad spend in Q4 is close to 2% actually ad spend. Then we see over the close to 2% ad spend, and over the year also we have done close to 1.9%. So it's largely in line. In first quarter it was very minimal, but in second and third quarter because of Diwali campaign we done reasonably good ad cost. In last quarter also we done close to 2.14% type of ad cost.
Okay, got it. Thank you.
Thank you. The next question is from the line of Anurag Lodha from Axis Capital. Please go ahead.
Thank you for the opportunity. I just had one question. So your exit gross margins came in at about 34%. So I just wanted to understand if we can sustain these margins in the coming quarters, since you've been taking so many initiatives towards gross margins. So I just wanted to get a sense on that. Thanks.
Yeah. See, we always look gross margin at over the year level. So of course, our last year gross margin was close to 29%. Last quarter, of course, was reasonably good because there was a fresh crop, so that has helped us in improving gross margin to this level. But yeah, the regular gross margin, if you look at, close to 150 basis points higher than this. So close 31% type of gross margin which you look at when we look at over the years.
Sorry, you said 31%.
31%. That's the gross margin which you look at when you see over the years.
Okay. Okay, understood. Thank you.
Thank you. The next question is from the line of Binoy from Sunidhi Securities and Finance. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just a question on your distribution reach, which is about 9.5 lakh outlets. How much of this would be would the split between core and focus states?
Yeah.
Hello.
Yeah, what's the question? Sorry, can you repeat?
Of the 9.5 lakh outlets of distribution reach that we have, what would be the split between core and focus states?
Yeah, so core would be the highest. So it's about 7.35 lakh outlets in the core state. Focus has 112,000 outlets, and the rest is others.
Understood. And sir, let's say in these.
Let me give some more insight on the question what perhaps you asked. Right. So in the core state, we enjoy. We have gained numeric distribution. We have a numeric distribution of 55% plus in the core state. While in the focus states, with just the entrance, we have about 4.2% numeric distribution. So that's the room what we have in focus states, and we are fairly good on the core states.
Understood. So just as we have a reach of 9.5 lakh outlets, what would be, let's say, Haldiram's reach?
I mean, I'll not be able to comment on Haldiram, but I'm sure, they.
I think what we have in core market, they must be.
They must be at a pan-India level if you take Haldiram as a brand.
Sorry, I didn't understand. So can you just come again?
So I'm saying like, we enjoy about 55% numeric distribution, right? In our core state. And that's the kind of market share, Haldiram has for the pan-India, for the country kind of thing. So their numeric distribution would be 55% for pan-India. This is what we're saying. I mean, you can look at easily, 3x kind of a number for what we have. That's our guess.
Understood. And sir, the other question is on the portfolio that we have of ethnic packaged sweets, Western, papad, and others. If we have to understand this in terms of the GM profile. How would the GM profile be stacked up?
So, I mean, GM, if you look at the sweets and papads will be, ahead of curve, right? And the Vijay and team would broadly be on the same stuff. And then the Western snacks would be a notch below.
Understood. And what would be the differential between, let us say, Western snacks and papas? Couple of percentage, not too much.
No, not much.
Understood. That's all from my side. Thank you so much.
Thank you. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
So, thank you, ladies and gentlemen, for joining us for this call. I mean, it was a pleasure interacting with you all. Just in case if you have any questions left out, feel free to reach out to us. We'll be happy to answer them all. Thanks once again.
Thank you very much. Thank you to all the investors and shareholders.
Thank you. Ladies and gentlemen, on behalf of Essential Technologies Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.